Hello traders, welcome to this week's analysis from the 16th of March to the 20th of March. This week we'll be discussing the Aussie dollar USD, the Euro USD, the British pound USD, the USD Japanese yen, New Zealand dollar USD, the EURJPY and gold. As always, a quick disclaimer, today's analysis is for educational purposes only. All views or information is of my own opinion and should not be taken as investment advice. Forex is a high risk, high reward business and you should never trade with money you cannot afford to lose. That being said, let's get right into the weekly analysis. Here we have the Aussie dollar USD. Clearly the bias on this pair is very bearish. I'll go through the relevant resistance areas or event areas in the chart for you. Obviously, we have long-term resistance up here, as I've said previously, and long-term resistance here around 69261. This resistance area here, 67545 or thereabouts, is, in my view, key. We also have recent resistance here at 66740 or thereabouts in the formation of this false break at that level, which was previous support. That's now acting as resistance. So we have this inside bar false break set up, which was the catalyst for price, from a price action point of view, capitulating back down. Interestingly enough, price is now heading towards long-term support way back in October 2008, around the 660 level. So it would be very interesting to see what happens should price get to that level. You would think that we could get a bounce back up from that level. It's been above that level for, again, since 2008. So should that happen, we will wait for a retrace to enter the market as long as price stays below this resistance here or this resistance here, and then we'll take advantage of a retrace and target probably the recent low around the 660 area. Long-term support, of course, that area in due course. But for now, there's no action to be taken. We just wait for price to come back to us so we can sell on strength. And again, somewhere around the 66740 or 67545, we'll wait for that to happen to re-enter the market on a significant sell signal. But it is interesting to note, as I said, price is about to hovering around long-term support for, over 10 years. So very significant area where we are right now. We'll see whether price capitulates through that and continues to go lower. There's no reason why that can't happen, or if in fact price bounces off that and retraces higher to give us an entry to go short, retargeting that 660 area. But it's a wait and see game for now. Just a word of caution, of course, the markets are very volatile. You don't need me to tell you that. So if you are going to trade, just be aware of the volatility in the market. You might want to trade a smaller lot size because they really are unpredictably volatile at the moment. From my perspective, we're not in a hurry to get into any trades at all. We have one trade in the market at the moment, which is a British pound Japanese yen, which I shared with you guys. So I'm in no hurry to enter the market until, of course, I get a solid sell or buy signal at an event area. But whilst this volatility is hanging around, I'm happy just to wait for our opportunity to come to us. Anyway, so just a word of caution: if you do choose to enter the market, make sure it's on a very clear signal and take into consideration the volatility of the market. Okay, cheers, guys. Here we have the New Zealand dollar, US dollar, very similar to the Aussie US dollar. Obviously, a very bearish bias on this pair. We have resistance up here at 67515, long-term resistance. We have support, turn resistance here at 64853 or thereabouts. Remembering these are areas only, guys, not to the pip. We have resistance here at 64451. This 64451 area is very significant in my view. We then have previous support, turn resistance at this 63261. You can see here we have this inside bar bearish pin bar structure, which formed at that 63261 at the previous support area. So this is now resistance. We have support at this 61936 area. It's a recent low around about this 59964. From a price action point of view, we are looking to take advantage of this bear market with this pair. We will wait until we get a significant sell signal around about the 63261 area again, see if that gets rejected, or even of course 64451, either one of those two, or somewhere in between these two, or beg my pardon, let's get rid of that, somewhere in between resistance areas here. Should we get a significant sell signal that's in line with our trading edge, then we'll take full advantage of that, and we will probably target, maybe down here somewhere. That is yet to be seen, of course, and we'll make an accurate judgment on that based upon what price prints and what opportunity comes our way. But for now, we will wait for a retrace somewhere around here or here to take full advantage of the bearish bias on this pair. Cheers. Here we have gold. The overall long-term bias on this pair remains bullish. We'll just go through the relevant areas first. We have previous resistance, the previous high of around the 1688, 1690 area. We have further resistance here around the 1658 through these pin candles here and this bearish pin bar here. In fact, it was this bearish pin bar which was the catalyst for the sell-off from a price action point of view. We have resistance here, which is 1611. We have support here at around the 1563 through this area, and we have support at 1535 through here, and of course we have long-term support at 1450, 1455 area. So my bias, as I said, is long-term bias, is bullish, even though we are in the middle of quite an exhaustive sell-off, which is quite obvious. What's interesting to note is that price has closed below this previous support on Friday through here. So it'll be interesting to see what happens at the end of the trading day, where price ends up today. Should price continue to fall through this support area and this actually be more than just a false break of support, then of course for us that's fine. We'll look to take advantage of that, and we'll look for some sort of price action signal around about recent support or thereabouts for us to go long on gold. So we didn't enter the market based upon this pin bar structure here. Whoops. Sorry guys, this pin bar structure here, for a number of reasons. The main one was it was a counter trend signal, so we didn't enter. We will wait for price to fall into our trap, so to speak, and we'll buy on weakness somewhere, preferably down around this support level here. Or it's going to be interesting to see, as I said, what happens to this support area here over the next day or two. But either or, we certainly will be looking to go long at some point again on gold. It's just a matter of where the opportunity presents itself, logically on the chart, of course, for us to take full advantage of it. But my overall bias is bullish on this pair, even though we do have a short-term downtrend going on. That's purely just a reaction to the market. Welcome to the market today. But again, we will be taking advantage of this downhill price movement to allow us to enter the market and take full advantage, possibly up here around the 1611 as a take profit area. That would be logical, but again, it depends where the signal presents itself before we make that decision. It would certainly be within the realms of possibility to retarget this 1688, 1690, because this in fact was a false breakout. So we'll wait and see how that plays out, what presents itself to us. But for now, my bias is long term. I'm a long term trader. My bias is bullish on this pair, and we'll wait to see what happens and take advantage of this current weakness in the market to allow us to buy on weakness. Thank you. Here we have the Euro Japanese Yen. This is one of the crossover pairs that's on my watch list. My bias on this pair is bearish. As you can see here, we have long-term resistance up here at 122.837, thereabouts. We have resistance here at 121.323, again, or thereabouts. We have resistance here. Resistance turn support here, turn resistance through this bearish pin bar here, and through this candle here, the 119.874. So this is a resistance area here. This is significant in my view. We also have support through here, which has turned resistance via this structure just here. We have this inside bar structure here, a bit hard to see, but more importantly, we have rejection of this level through this candle just here. So and then of course we have support down here at 117.126, and more recently around the 116.286 area or thereabouts. From a price action point of view, this area here, this 119.458 to this 119.784 area, we'll be looking where price has been thereabouts. There's nothing pretty about this pair whatsoever. We'll be looking to short this pair should we get a price action signal at either this resistance area here or this support turn resistance area just here. So we'll wait and see what happens on this pair, but my bias is bearish, and we will probably target first support here, but again we'll make that decision when the opportunity presents itself. But my bias is bearish. We will simply wait for a retrace or a significant price action signal to form, as I said, somewhere in between these two areas here, or even up higher if we should we get a signal up here around the 121.323. That's better. Again, my bias is bearish as long as price is contained under this resistance area here, and this 121.323 area. This is also very significant from a price action point of view, from a bearish bias point of view. So we'll wait and see what happens with this pair, and should an opportunity present itself, we will jump in and be shorting this pair. Thank you. Let's have a look at the USD Japanese yen. My bias on this pair is bearish. As you can see, we have a resistance up here at 112.131 after price broke out really through the top of this trading range it had been in for quite a while. You could see here the formation from a price action perspective of this inside bar setup at this resistance level was the catalyst for heading prices back down. We have another inside bar set up just here in line with the way price was moving. So of course that just continued to push prices down. I'm bearish because of course we've now broken well and truly through this the previous support, which was the bottom of this consolidation zone, has turned resistance through here, the formation of this candle here. Because we have a significant breakthrough of this area here. This area here is key, by the way. We now have, of course, previous support here around the 104.460 area, which again has been well and truly broken through. And now we have a recent support here at 101.211, which was previous support as well, previous low as well. So from a price action point of view, because of this breakthrough here, well and truly we're looking to short this pair at some point. We will wait for a price action signal. It's hovering around this price now, but we'll wait for a price action signal around this 107.900 area or even higher. If price stays below this 109.700, which again was really the top or thereabouts of the consolidation period, then we're bearish. So we are looking to take advantage of a sell signal somewhere between 107.900 and this 109.700, somewhere there. And our first target may very well be here, although this has now been capitulated and really nullified this previous support area through this massive downward movement here. So more than likely our take profit will be somewhere down here around the 101.200 area, but that's a wait and see when the opportunity presents itself. So that's my bias on the USD Japanese yen. Here we have the British pound USD. My bias on this pair is bearish. So I'll just walk you through the relevant areas. We have support down here at 120211 thereabouts. We have support here at 122093. We have support, turn resistance, turn support here at 125800. So this was previous support, came resistance, and through bullish pin bar here was support again. So this area is important. We had previous support here at 127697, which really was the bottom or the low side of this range bound zone, as I mentioned in last week's analysis, between here and here. That has had support through here, and of course through here, where price attempted to break through that, head lower, got rejected, and of course capitulated prices back up to this resistance area here, which is the top of that range bound zone, of course. And then we had the formation of this bearish pin bar, which was the catalyst for prices dropping back down significantly. So interestingly enough, as we can see now, that price has dropped well and truly, broken through in a big way through the bottom of this range bound zone, this capitulation area just here. And has continued to drop since then. It's also, as you can clearly see, closed and continued to fall below this previous resistance, which was more recently support. So the fact that we have not only closed but significantly closed below these areas indicates that we want to be on the short side of this pair at some point. So from a price action point of view, we'll simply wait for a retrace. A lot of waiting in this game. 9 times out of 10 is where you make your money. So we will simply wait for a retrace somewhere around this 125800 area, should we get a sell signal, or in fact better, maybe a retrace back up towards the bottom of this range bound zone, because this area here is significant as far as I'm concerned. As long as price stays below this area, this 127697, then my bias is bearish, and we will target, depending on our entry of course, where we are able to enter the market, we will target, our obvious first target will be around this 122093 support area, or even lower. But of course, that's a wait and see game. But I will be looking to short this pair based upon the structure of the market. But we will wait to be able to sell on strength, as we always do. Again, just to repeat myself, somewhere around this 125800, or preferably back up here, get a rejection of this 127697 area to take full advantage of the bear market. Cheers. Here we have the Euro USD. My bias on this pair, well, I don't really have a bias on this pair at the moment, purely because of the volatility in the market. As you can see, the last couple of weeks, price has capitulated broken through this previous resistance here of 112407 or thereabouts. This area here is significant as far as I'm concerned. Price continued to break through longer term resistance here and around the 14099 area, and then of course created a recent high here, which was previous resistance back in 2019 around this 114953 area up here. As you can clearly see, I'll go through some significant event areas. As I mentioned, we have resistance here at 112407. Again, that's important. I'll explain that in a moment. We have resistance down here, turn support at 110977. So resistance here, through here, and through here, as I explained in last week's analysis. That has turned support through this formation here of these two candles. So this is an interesting level as well. We have lower support down here at 109886, through here, through here, through this structure here, and more recently just here. Then of course we have support through here this formation here at around the 108.806 area, and of course the recent low of 107.870. So what does all this mean? Well, at the moment it doesn't mean a whole lot. There is absolutely no reason to be trading this pair in my view. One, because of volatility, and two, there really is no defined structure which way the market's going to move on this pair. So I'm taking a backward step on this pair at the moment. There could be an opportunity to go long if we get a significant buy signal at this support area here. This is an important area, or even in fact down here. It'd have to be a very significant buy signal. This here was a false break, even though price broke through key resistance areas and halted at longer term resistance up here. You can clearly see this structure break because as soon as it went up it came back down again. So there's no real indication that this is a move to the upside as yet. It's purely just the volatility of the market doing its thing. So for now, I don't have a view one way or the other. Should we get a buy signal around previous support, well then we'll look at that on its merits. Again, should we get that, we'll probably target up here around this 112,407 area, because this is a significant area as far as I'm concerned. Conversely, if we get a retrace or we get a sell signal somewhere back up around this area here, then we may look at that to short, and then we'd probably retarget down here somewhere, although it's hard to define because there are various overhead support levels, so it's really just wait and see what happens. So there's no real price action to be taken on this pair at all. We just wait and let the market play out to give us an opportunity, and we'll take that opportunity based upon its merits, of course, but for now there's just nothing to do. So this false break is no indication, of course, as I just said, that price could be turning around and heading into a bull market. Again, that's just a pure reaction of what price is doing at the moment across the markets, really. So again, nothing to do, but I will keep an eye on this, obviously, and should we get a signal one way or the other, we'll base that signal based upon its merits and enter the market accordingly. Cheers, guys.